Hello friends, today's topic, welcome correction in markets. Three reasons. I am Dr. Bharath Chandra. Purpose of the video is financial education of society. Deliberately, today I am wearing red jacket. A welcome fall for the markets today. Although the fall was not particularly for local reasons, a correction now and then is very important for the further strengthening of the markets. Nifty fell by 1.2% today. Nifty mid cap 100 index fell by 1.1%. Nifty small cap 100 index fell by 0.7%. And Nifty next 50 was down by 1.3%. Major reasons for the fall in markets. Number one, US markets crashed yesterday. US markets were down around 2% yesterday. The manufacturing index in the US fell sharply. This has brought back recession fears in the US. The US stock market had been rallying on the expectation that the economy will be strong in spite of high interest rates. However, markets became nervous because of the economic data released yesterday. Due to the fall in US markets, most of the Asian markets were also down heavily. If the US economic growth is weak, then there is always fear that the weakness will spread to other economies too, and hence global markets were weak today. Global stock markets today, Hong Kong Hang Seng minus 2.12%, Japan Nikkei minus 6.17%, Germany DAX minus 1.48%, France CAC minus 0.92%, UK FTSE minus 0.55%, US Nasdaq yesterday minus 2.3%. Second reason, profit booking. Apart from the very weak global cues, Indian markets fell also due to some profit booking. As we have mentioned in our recent videos, small corrections are possible anytime, especially since markets have been continuously rallying since October 2023. The correction is expected to be more severe in mid-cap and small-cap stocks since they have rallied much more compared to large caps. In fact, as long as investors, we must be happy when there is a correction since continuous uptrend is not sustainable and not healthy for the markets. Markets have to go two steps ahead and one step back so that it can go forward again. If there is a continuous upward movement, then the correction also will be more severe. Third reason, technical indicators indicating overbought market. RSI indicator has been indicating that the overall markets are overbought since Nifty 50 index RSI has in the 65 to 70 range for many weeks. When Nifty touched 25,000 yesterday, the daily RSI was 73, weekly RSI was 77 and monthly RSI was almost 70. After today's fall, the RSI has fallen a bit. When markets get heated a lot, it is natural for a correction to come. As per various analysts, they suggest buy on dip for long term. We always suggest doing SCP, SIP regularly and then also invest some money if possible when there is correction or weakness in the markets. In the long term, this strategy will surely work out when you do it in fundamentally good stocks or good mutual funds. Usually every year a 10% fall from the high is common. So far it has not happened in 2024. There are still 5 more months. We need to see if markets correct around 10% from the highest point in the year. If and when it happens, it will be a very good opportunity to invest. We should not fear short-term corrections. Without corrections, markets can never rally further in the long term. End of the video, here is a question. Did you invest some money for long term today? If yes, approximately how much? Otherwise, type no. In case you are not the member of this channel, this is the time to subscribe, press the bell icon, send the video to all your friends. The video is good, press the like button. Thank you for watching. Bye bye. All the best.